I don't see a lot of home builders that do a lot of self-performing work anymore. Does anybody here do a lot of self-performing work? What do you self-perform?
Almost everything except, well, framing, trimming, siding, soffit, fascia. So we do almost everything except for we don't self-perform roofing anymore or plastered drywall.
Now, why do you do that? Or why do you choose to do that?
Control. I mean, our cycle time on jobs is very good. We've got good quality labor, and there's a lot of guys looking for labor. So I feel already I have issues with, as an example, I've got a foundation that was supposed to be in 2.5 weeks ago, still not in. If I had control, it would be in. So, I mean, it's bad enough that I have 27 subcontractors, now to subcontract labor as well, that would be a challenge for me.
Right.
So it's one of our greatest assets when we survey our clients at the end of a project, is our labor.
Now, how are you doing with bringing labor hours in? If you say it's going to take 100 labor hours, are you usually pretty close?
I would say we're pretty accurate with our labor hours.
Do you guys monitor that?
If anything, our probably.
She is saying no, so you don't really know.
No, we do. We monitor it because we have, yeah, she's new. So we have their time cards, and then I have the takeoffs that I do ahead of time. So we'll be able to do that. Probably where we're the worst at is our project management hours.
Oh, really?
Yes.
Is that because your cycle time's longer than what it should be?
No, our cycle times are usually good. I'm doing some project management that I shouldn't be doing, and our project manager is taking time, his sweet time, so.
You're doing it because he's taking his sweet time.
Right.
You can't get him to do it quicker.
Right.
So how do you rectify
As
that?
an example, we're doing $3 million a year in sales, and he can't, you said before he should be able to handle 5. He's not able to handle that. I'm doing probably 25% of his work.
Wow. Is it just tough to find project managers? Is that why you can't get rid of him?
No, it's because I'm a softie.
So you will work the extra 20 hours a week because you don't want to get rid of him.
Yeah. Maybe I won't anymore.
No, and like I agree with you. Now, do you guys all feel like you got the materials under control? I'd say in the remodeling world, what do you think is the toughest thing here?
Our toughest thing we're struggling with right now is having project managers monitor the cost compared to an estimate. So trying to find a good system that, and it's going to be, we're thinking of tying it back into incentives. That's the only way we're going to get them to look at it.
Right.
Here's what was estimated and meet that without destroying our culture, that it's, they're just worried about their own jobs and not everything as a whole. So just trying to.
So I'm trying to figure that. What's your culture?
Great, we have a great culture.
So what do you mean you destroy it?
Because, so for instance, different business segments are more profitable than others. So if you're tied to those, or your team's tied to the jobs you're doing, well, this crew over here needs help. Go help them put a beam in. I got to leave my job. No, I'm staying here, fudging their hours to make it work better.
Yep.
There's a lot of negatives I can see if it's not set up properly.
Okay. Anybody else have any issues with materials? That's where I said a PO system really comes into play. If you have the PO system, you should be right on with materials. I guess the only way you could be off the materials is if you estimated wrong, right? I mean, that would be about it. But you guys should have that part down. So I'm with you guys. The other thing is where I'm seeing one of the areas that really hurts, and it's in the supervision, is not being able to control the subcontractors. I have people say we can't control the timing of it because I'm ready for, say, the electrician, and he's 2 weeks out. Or I'm ready for the next guy to come in, and the electrician isn't done yet. You guys have those issues with trying to control the subs? I mean, that's the biggest thing that I'm hearing people doing. How do you guys control the subs to make sure you keep on your cycle time? Pay them quickly. I mean, that's about all you can do, right? I mean, is there anything else you guys can do? Yes, Stephen.
Yeah, one thing that we haven't figured out yet, but that we
Because you guys don't have the even workflow. Gotcha. So if you had 6 homes going all the time, they would know, they would continuously. How do you guys change that? Right, right. Because you don't have the pre-solds, so that's why you don't have the flow. Does anybody else have that issue at all? You guys do? You do? Yeah. So I could see where a sub's like, hey, I got this other guy, he's going to keep me busy all the time, so I'll see, but when I come back, I want another $1 an hour, or whatever it is. Okay. Yep, so that can be an issue too. Now that's a big rounding thing I hear from everybody is how to keep the subs on time, and that's A, and B, how to keep the subs. And that's a tough thing to do.
Has anybody in there ever analyzed the difference between trying to manage the subcontractors for your timing and then maybe that person fudging that extra hour?
You mean as an employee?
Yes.
I will tell you, I can just speak to the remodeling world. We did that analysis years ago, and by far, your margins are way higher when you sub everything out versus self-performing. By far. Would you agree with that? I mean, it's not even close. Yeah.
You're just vulnerable from the IRS side.
But as long as they're true subcontractors, you know.
There's a fine line.
Yeah, but no, the guy, I mean, I have seen that, and it's amazing, Houston, that when you really bid that stuff out versus self-performing, you got to project manage. I mean, that's what you're down to is project managing that. So it's amazing how different the gross profit was. Okay? Like we said, obtain bids, quotes from suppliers and subcontractors. That's the other thing we've seen people do. You get comfortable with a certain subcontractor, so you don't really bid them out. Does anybody do that? But they help you and they get it done, and you don't have to babysit them either. So I don't know what the trade-off is there. I don't know what that is, but I have heard that. I've used the same guy for years. He's doing it. Then you go bid it out, and the next guy's 20% cheaper, but then you're nervous because he's 20% cheaper. Does he have the quality, and can he get it done? So how do you guys control something like that where you have subcontractor creeping prices? The other thing I hear with the smaller subcontractors, I think what you're talking about, is they can't get their billings in. I mean, I had one guy tell me he got a bill from a subcontractor like a year later. No, because guys say when they have a PO system, as we talked about, it's like, hey, we got this job closed out, but we still haven't got the electrical bill. But how do you let them bill you a year later? What I mean, and they do it sometimes, don't they?
We call them up and say, where the hell's your bill?
Right.
That's all you can do.
Right.
Yeah,
And you.
but if you've got that clause in your contract, you just kind of let it slide, shred it, you know?
That's a great clause to have, but in some areas I hear people say they have it, but they can't enforce it because they can't get the next electrician. So I mean that's now I'm assuming you don't have that problem. They get their bills in.
They do.
Do you have to call them though ever?
Not typically, no.
Okay.
We don't.
They probably didn't do it again, right? Good. There you go. I'm going to be a nice person. Be thankful you got 70%, right? Right? Do you guys get many? Does anybody take discounts for quick pay for their subs? Do you? What do you? Like I heard somebody told me, and I'll just use this as an example. We pay the 10th and 24th. Let's just say that. If you want to get paid before that, I'm going to take 1, 2, or whatever percent. Is that sort of how you do that? Okay. The other thing where I've heard people have saved money, and we've had more people do this, that they have reduced the number of plans. I had one guy say our plans have gotten bigger and bigger and bigger, and we finally said that, you know what, we only use X amount of plans. If we sell this other plan, we can't do it in our time frame, so we're trying to get down to say, I'll pick a number, the 25 most efficient plans and the ones that sell the most. And a lot of people are now sort of redoing their plans a little bit, tweaking them because they say some of their plans have gotten stale. Is anybody going through and trying to do that? I mean, you guys are doing that? Yeah, because you got to do it because you could have 100 and some plans, right?
Yep.
And you don't want to build 100 different types of homes.
We can't just keep phasing in new floor plans and not phasing
Right.
out any old ones.
That's just it. That's what I hear. You phase in new, but the old's still available. So I liked your house 10 years ago. Can you build it for me? You're like, yeah, I got to do that. And you don't want to do it. So that's another thing to take a look at. Like we said, suppliers, subcontractors, if you can, if you have the availability, you got to have 2 or 3 of each because you never know what's going to happen. The other thing we want to do, know what your true costs are to prevent profit fade. Really understand your material cost, your labor cost, subcontractors, indirect job cost. I see more profit fade on indirect job cost. General overhead, you guys got that down, but the indirect job cost is where you get it because those are sort of soft cost and you don't think about them. When you went over on your subcontractors and you paid them more than what you should have or you didn't get an approved change order. Same way with materials. That's easy to figure out It's those soft costs that I think will hurt you. Estimating, we said profit. Add to the final cost estimate. Margin versus markup. Does everybody know the difference between margin versus markup? What we have here, and Kelsey will pass it out. You want to pass this out right now? This is actually one of the things. Give me one of them, you pass the rest of those out. If you guys want to use markup, understand what your margin is. We have this margin versus markup table. We went from a desired margin of 1% to 99%, so you know what your markup has to be. So I don't care if you use a markup method. What you want to say is, here's what my gross profit is. Because the first time Jim and I did one of these presentations, we did it for a local organization, and we talked about this, and I think we almost got thrown out of the room because people were saying, that's not true. Well, guys called us the next day, and they said, you know what? I'm using the markup method. I'm actually losing money because my overhead's more than my margin. So if you look at it here, you want to get a desired margin of 21%, you got to mark it up almost 27%. So I don't care if you mark it up, just understand what your gross profit's going to be. So this is a nice little cheat sheet that you guys can use. Give it to your estimators, because I think Steve, and I'll say this to Dawn, in the remodeling world, you guys do mark up a lot, but then you know what your margin is, right? I mean, it's 1 point, whatever it is. I hear a lot of guys, 1.53, 1.5, whatever that number is, and you say, okay, if it's 1.55, that means, here's what I'm going to get for a margin. So it works out well. So if you mark it up, 1.53, you're going to get about a 35% margin. You're not going to get a 53% margin. Like I said, I don't care if you mark it up, understand what your gross profit is. Like we said, we talked about margin versus markup. You can easily make financial decisions and gauge the impact on your bottom line. Accountants and bankers, we talk about gross margin, not markup. And, gross margin is a percentage that you earn on the selling price of a job. Simply put, as we said, it's every dollar you have in income after paying all your direct cost. So that's where that's at. And we talked about this. Like I say, if you use a bid, if you prepare a bid using the markup method, you will not get to the desired gross margin. So just to understand what your desired gross margin is, then do the corresponding markup. Like we said here, if a 33% gross profit on a job is desired, direct costs are $1,000, then here's what you're going to do. You'll have right here, your total costs are $1,000. You mark it up $330, so your selling price is $1,330. You only got a 25% gross margin, gross profit. So it's not the 33%, and that took me a while to convince people of that. So now I gave you sort of the cheat sheet, so it's easy for you guys to do. You don't even have to go through the math anymore. And we talk about how you can do that. You take the 1 minus gross profit, and that gives it to you. So we did that. We talked about the margin method, so I'm not going to go into that. Okay, monitoring. This is what we talked about earlier also. We talked about, all right, you need to meet regularly, allows for timely reactions to changes in circumstances. You should have at a minimum a job cost meeting weekly. At a minimum, weekly. Who should attend, in my opinion? Project managers, controller, estimators, and the owners. All four are equally as important, especially you guys. And it was a while for me to get the owners to allow the bookkeeper, controller, whoever into that meeting. And the project managers did not want that person in the meeting either. But you guys need to be in that meeting so that you can update your work in process schedules. Or you guys may ask some questions that other people aren't thinking about. So I think it's extremely important that you guys are in that meeting. Is there anybody that's a bookkeeper controller here that is not in that meeting on a weekly or monthly basis? Good. You need to be in that meeting. What do we look at? You guys tell me if there's anything else that I'm missing here. We look at percentage of completion. You look at change orders. You look at revised cost estimates. You look at problem jobs. You look at problem people and or subcontractors. You look at if there's any claims or job safety. What else do you guys talk about in that meeting? How long does your job cost meetings last on a weekly basis? 1 to 2 hours. What's yours? Okay. Yeah. If you want to be efficient, you're right. People don't have time. I know a couple of builders, and it's probably an hour or so. is what it is. But what happens is, the more frequently you do them, say you do them on a weekly basis, you go through the same drill, right? And they know what they need to bring. And if they don't bring it, you're going to let them know and say, you better bring it next week, because you don't want to sit there waiting for them to get their information together. So, yeah, and you got to make sure they're organized, and you got to let them know in advance what they need to bring to the meeting. Now, as the accounting people, you guys got to sort of lead it, because you got to bring the information, right? So you got to say, here's what we need, where are we at? Because they don't really know the paperwork part of it, what they need. The other thing, and we're seeing this more out in the field also, I'm not sure if you guys use it, they're having more of their project managers use the tablets out in the field so they can get change orders in or send things out where you can send out a change order or an invoice. You guys doing that? Are people getting more than the tablets? I mean, because the guys out in the field, call it what it is, they don't like paperwork, right? That's your biggest complaint about them is the paperwork. So I'm seeing more and more people go to the tablets or the mobile apps or things like that where you can get it right now. That sounds like what you guys do, right?
We even make our subs log in and do their stuff
Oh,
online.
okay.
on the portal.
Okay, good. Yeah, the more you can get to that, and you probably got to educate them.
Yep.
And that's okay, is what you have to do. I actually have some people, because the trades are so tough nowadays, what they'll do is on about every 3 to 4 months, they'll bring in certain trade partners to their office, and they'll say, we are trade partners. What can we do as a company to make your job easier, to try to make them feel like, we're in this together? Because we need to get this job done on a timely basis, and obviously you want it done on a timely basis, because if you do it on a timely basis, you can go on to the next job and you can make more money. So that's what they do. They have these trade partner meetings and say, what can we all do together so that we can make this process go better?
One of the things that we were talking about is one time about 2 or 3 years ago, we had a contractor in Toledo that the controller was not booking accounts payable on a regular basis, and we made $1 million adjustment to work in process. Remember that? The invoices were coming in to the project managers, project superintendents, and they were sitting on their desk for approval, and they weren't giving them after they approved them to the accountant. Most of you accountants get the invoices, is that right? So you don't have that delay, but monster delay, and it really misstated accounts payable and job cost and gross profit on the work in process.
Right, right. Well, finally, I remember the guy who was in charge, I think he said, this is it. If your jobs come in any lower than what you say right now, you will never get a bonus again, or some comment like that. He had just had it with all the project managers there. So here's the thing, like I say, now, years ago, number 2 used to be the biggest bugaboo, was change orders. Is there anybody here who doesn't feel like they don't have change orders under control? Now, do you guys get your change orders and get the money paid for before you start the work, or do you wait till closing?
They get the money that they sign the change order.
100% of it?
A lot of times we do it on the closing.
Did you hear what he said? He didn't say it very loud. He gets all his change order money at closing.
I tried that once.
Tried that once, and how did it work out for you?
Cost me $40,000 and I lost it.
Or North Dakota Nice.
You what? North Dakota Nice?
Signed out.
I know they're signed off on, but I think you guys would rather have the cash. You're in a much better position to argue at closing, than what I was told. And you guys tell me if this is true or not. The minute they did the change order on their own, that's the minute you want to collect because they feel good about it then. The longer they wait, they're like, I don't know if I really needed it, and you really weren't worth the money you said you were worth. It's a whole psychological thing. It's a negotiation thing. Like you heard Dawn back here, she said, without even batting an eye, we get 100% when they do the change order, or you don't start it, right? Like we say, billing and collections, who should attend? The AR clerk, bookkeeper, controller, project managers, and owner. This is another thing where I said the project managers need some help, because this is a big bugaboo. You guys can't get the paperwork in by the project managers to bill or to pay your bills also. Isn't that a big, because they have to sign off, they have to approve it, they have to do it. So that's another thing where I hear holds up billing and collections. It's the project managers. At least that's what I'm told. Is that true? You can't get the paperwork in from them. And then we also talk about past due accounts, collections, retainings, timely draw. That's the biggest thing. The last 2 things here are the biggest ones: timely draws and change orders. Got to make sure you get your draws in timely, and you got to make sure you get your change orders signed and approved. We actually did work. We got pulled in as consultants for a construction company, and what happened was they had signed change orders on a project, but the person who was a project manager for the company they were doing work for quit, and they assigned another person to do that. The owner of this company said, I'm not paying those change orders because the person who signed them did not have authority to do that. So make sure you get it from the homeowner. That's who you want to get your change order signed by. I mean, that was a tough one for them to deal with, and they didn't make out too well on that one. Now, we also talk about financial statements. We've mentioned this. Who should attend? Obviously, the bookkeeper, the controller, owner, and other key personnel. The second one is the toughest one to get. You got to get the owner in these meetings. You got to sit them down, and here's what you do. You sit them down, you shut the door, and you take their phone away. How many of you guys have been in that meeting, and just like Brandon here, he has not gotten off this phone since 8:30 this morning, right?
Do you want to see it? These are all my notes that you.
Okay, good. But how many of you guys have been in that meeting where they have their phone, right? Or I'm sorry, it's ringing. I got to take this. I'll step back in. You just say I get an hour of your time. You're putting your phone away. Now, Amanda probably is going to look at Jim and I and say, does that rule apply to you two guys, right? Yeah. We are just as guilty. So, and we have somebody here that will attest to that, right? So, yes, we do that. So, yes, we need to, as somebody said, respect the person that's, trying to go over information with you. So I get that. We talk about account reconciliation. Go ahead.
You guys are critical to your company. And all too often, you don't stand up for yourself or stand up for the company and say, 1 hour a month, we're going to go over good, bad, the ugly. We're going to make corrections. We're going to make you money. We're going to improve margin. We're going to improve operations, but I need your mind. I need you to focus with me on the financial statements. 1 hour. 1 hour. And you guys got to get that out of them to get progress and to make profitability. And I really do think a lot of times that you just don't push on them hard enough to make them take a break or meet with them when it's convenient for them. But somehow you got to make that time. It's got to be involved in. You got to make that time.
We talk about financial statements. This is the one thing, and I see a lot of bookkeepers, controllers don't do this. They don't reconcile every account every month. I don't know why you don't do that. Like I said earlier today, you can't have credit balances in asset accounts. You can't have debit balances in liability accounts. I actually went to a bookkeeper probably 2 weeks ago and I said, how can you have a debit balance in your overbillings account? Well, that made about a $150,000 swing in a negative way from their income because she failed to post the new work in process number over and under billings. If I would have caught that, she would have sent out wrong financial statements. But I'm saying you are smart enough. You have underbillings, which is an asset. Now you have overbillings, which you're looking like it's an asset because it's a debit balance. You can't do that. So when you have any account that is a debit where it should be a credit or vice versa, investigate that. It can't be right. I just talked to another guy. I said, you have negative accounts receivable. It was on your books in December. It's on your books in February. It's on your books in March, and it hasn't changed. Doesn't that say something to you? It's not right. So I had to send him an email and say, take a look at that. Then we talk about work in process schedule. This is another thing. Make sure you revise the estimates. As we said, garbage in, garbage out. If something changes, revise the estimates and make sure you do your over and under billing adjustment, and then make sure you do your completed contract schedule. These are good management tools to take a look at. As we say with the financial statements, we want to do monthly. You want to look at gross profit in total and by job. You want to do budget versus actual and investigate significant variances. Financial ratios. They're an analytical tool used in the financial statement process to measure a company's activities and risk. Expresses the relationship of two or more financial statement items as a percentage or value, and they will help identify a company's strengths and weaknesses. And these financial ratios are only as good as the financial information you guys provide to us.